the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Amy Salzhauer of Good Growth Capital. Amy, thank you for joining us.
My pleasure.
Great. So what was your background before investing in early stage companies?
I started starting companies with scientists more than 2 decades ago. I really started doing that just to get data from my doctoral dissertation at MIT. I was interested in why certain technologies successfully leave or don't leave the lab, even if they might have either a positive economic impact or a positive social impact. So I did a master's at Cambridge University in plant sciences, really molecular biology, and an MBA at the Sloan School of Management at MIT. And then I was up to writing a dissertation and thought, well, I'd like to really do that kind of work and then I can write about it. So I ended up starting multiple companies and becoming the CEO of Ignition Ventures alongside my longtime business partner, Maureen Stancic-Boyce. So I would be acting as the CEO for those companies, and she was the COO of those companies, really co-founding them with the scientific founders.
So great. So what excites you right now?
Oh, there's so much that excites me. If somebody had told me that being a venture capitalist was so much fun, I would have started doing it a long time ago. My particular investment areas tend to be focused on biology and alternative materials. I'm really interested in moving down the chain or moving to more and more specific treatments and therapies. If you think about gene therapy at the DNA level, that is almost like trying to shoot a pigeon with a shotgun. So as we can take that to be more and more specific to RNA, to proteins, even to metabolites, I just think that's incredibly exciting. I'm also really, really interested in some of the alternative energy advancements that are being made.
Wow, technology is moving fast on all fronts, it appears. So for investors out there, what's your advice to them about investing in startups?
Well, we have a particular investment strategy. So Good Growth Capital invests a fund family, the Infinite Carter Fund, that focuses on pre-seed and seed stage transformative science, primarily at MIT. We do have companies in that portfolio that are truly transformative science that do not have an MIT relationship or affiliation. But in general, those teams either have an MIT alum or a professor or a current student on them. And we really are excited to be evaluating and launching those kinds of complex science and technology companies. That's not for everybody. You have to really have a lot of strong technical backgrounds and operating experience on your team to do that. Then we have a second fund family, which is seed and Series A investing. And we have 3 partners here in Charleston, South Carolina. We see a large number of deals that are really, really interesting in the Southeast that really very few people are looking at. So we end up with a balanced portfolio looking at both those kinds of MIT-focused deals and the Southeastern-focused deals. To me, that's really exciting, seeing these companies that very few people are either have the internal capacity to really evaluate or are looking at because of the geographies.
Well, that's great. So what's your investment thesis for your fund? What specifically criteria are you looking for?
Well, the Infinite Carter Fund is really looking for fantastic technologies, and the team does not have to be fully in place for Infinite Carter to make an investment. When the general funds are making an investment, those companies have moved further along the line, and we have a few different gatekeeping pieces. We have a very strong operating team. So all of our partners have operated significant companies, and we feel like one of our decision-making points is whether our specific team can help add to the company's growth. We really like to start early. We coach founders very early and we work collaboratively with them. developing deep relationships with them. And then we have priority access to these early stage deals coming out of MIT and out of South Carolina and the Southeast. So we're the most active fund in South Carolina. Our fund one has a tracking net IRR of over 47%. Things have gone well for us. So we feel lucky with that, and we're excited about our thesis.
That's great. Can you call out one or two portfolios that you can describe and how they're doing?
Sure. We invested in the first round and in all of the funding rounds of a company called Skyhawk Therapeutics, which is a very exciting company. Skyhawk has developed a platform technology towards enabling correction of exon skipping RNA mutations. And that company has done, within 2 years, multiple billions of dollars worth of deals with major pharmaceutical companies like Celgene, Takeda, Merck, etc. We're really excited about a portfolio company called Obsidio that has created a shear thinning biomaterial for embolization of blood vessels, about another company called Prion, and Obsidio is based here in South Carolina. Prion is based in North Carolina, and that's an AI created by Igor Yabaklov, who started and sold Yap to Amazon. I guess the guts of Alexa really come from Yap. Prion was just named one of CNBC's top 100 most promising startups in the world. We have a really exciting company called Unison that's created a transformative computing language that should enable companies to directly program the cloud. Revive Med, an AI for metabolites, that goes along with my focus, or the fund's focus, on finding these more specific kinds of therapeutics. I could go on. I'm really excited about our portfolio.
Well, so you have a great portfolio there, and glad to hear about some of the great technologies that are coming up from it as well. But let's talk about, what's your advice for people investing in startups? What do you tell people to do before they write their first check?
Diligence. Keep going on the diligence. I think you hear people talking about betting on the jockey or betting on the horse. In our area of investment, sometimes we can bet on the horse as long as the company is willing to put the proper jockey in place. I think one thing about investing very early is to really think about the capacity of the current management team, and also the capacity of that management team to transition to having a new management team if that's what's going to be required. I think that there are some crazy valuations going on in the market. A lot of them are coming out of California, but not all of them. And so really thinking through the pro formas and what are the actual allowable costs for starting that company that would enable you to have the kind of return that your investors rightfully expect. So I like to think through a pretty disciplined process of what people sometimes call discovery-driven planning. There's a great Harvard Business Review article on that, where you think about what are going to be the revenues at the end and how that flows back through your financials to what the allowable costs are for the enterprise. I think if you don't impose discipline on thinking through the financials, then you are probably not going to be happy with the financials in the end.
That's a good point. So what's your advice for people running startups? What do you tell their prospective CEO to consider before starting?
I was a startup CEO repeatedly, and I think you have to really be in it for the long haul and passionate about it. I've seen a trend for young CEOs, some old CEOs, but really mostly young CEOs, who are thinking that they are going to start a company and be out within a year. And startups that have tremendous value don't really usually work that way. You are going to be working your heart out for the long term. I also think that CEOs need to be just as disciplined in thinking about that financial model as investors do. And I also see a common mistake among founders where they think that because their product is better, at least in their minds it's better, that they will be able to demand a margin that is beyond the industry rate. And I think you really need to look at the average margins in the industry that you're entering and anticipate that you will not do any better than that, and make sure that you'll still be happy with the financial outcome if you don't achieve anything better than the standards in your industry.
That's a good point. Well, let's talk about the state of startup fundraising across the U.S. What do you see going on there these days?
Well, I think founders are always saying, we need help. We can't raise this money. And I think usually what that means is not that they can't raise the money because they can't find the money, but because they need to build a better investment opportunity. That's not true across the board. We're a majority women-owned fund, and I do see that it can be much harder for women and minorities, people of color, to find their way to raise money. I also think that complex science deals are harder to understand, so it can be harder for them to raise money. We also see quite a lot of regional difference. So deals that are priced in one way here in the Southeast will be a higher valuation if they're in New York or Boston, and oftentimes a significantly higher valuation if they're in California. So if I were a startup CEO, I might consider that and consider the positives and negatives of that in all directions, and whether you'll be able to sustain the valuations that you're given from the outset in California, or how the pricing is working across the country.
Great. So aside from fundraising, what challenges do you think the startup faces when they launch their company? Is it regulatory? Is it the market? Is it technical? What would you put at the top?
Oh, it's all of the above. I put all three at the top. Running companies, I would try to think of it as an exercise in minimizing risk. So if you think about it, there are multiple sources of risk that impact a startup. They include regulatory, they include financials and raising the money that you need. They include execution risk. They include human resources risk. And I think you're really trying to tamp down as many of those risks as you possibly can. You may, for example, have a huge amount of technical risk in your project. But if you have shown that your team can really execute, then you have eliminated a lot of as much risk as you possibly can. Similarly, if you have a huge amount of regulatory risk, you're going to have to show that you have at least taken the steps to have all of the human resources in place who know how to manage that kind of regulatory risk. So that lens has been helpful to me over time as a CEO.
Great. Are there any particular sectors or applications out there that you see as good immediate opportunities for investors to pursue?
We have specific investment areas that we focus on, but we don't focus on them because they're hot sectors or because we think that the market is moving in that way. We focus on them because we have significant expertise in those areas, and we really think that we're able to find companies that create significant value in those areas. So we look at software and data sciences, especially natural language processing, machine learning, data security, artificial intelligence. We look at health tech. We focus on health tech deals that will have time horizon where there will be an exit within the lifetime of our fund. Small molecules, devices, AI-enabled diagnostics, orthopedics, genetics and molecular biology. And then we also look at hard sciences, advanced materials, chemistry, and physics. Green tech, especially in energy and efficiency and renewables. We also look at ag tech and robotics.
There's quite a few opportunities out there to pursue. It seems like technology is just making advances on all fronts these days. So it's great to hear. Where do you think the breakthroughs are going to come through in the next couple of years? Which sector do you think is going to be the breakout?
Well, I'm a biologist by training, so I always think it's healthcare is it's so exciting what's happening with precision medicine, with genomics, with targeted treatments. That's what I'm most excited about. I think if I were a data scientist, I might be more excited on that front and thinking about quantum computing and the implications of quantum, but I'll stick with biology.
That's great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Oh, well, that's a good question. Paul, what would you like to cover that we haven't?
Well, I find your investment thesis very interesting. I find hardcore technology and science can be hard to diligence. And the question I guess I always come up with is this technology ready to go commercial? Are we ready to go put it into a company and make a product and sell it? Or is it too early and it needs more development? How do you decide between those two?
I think there is nothing that substitutes for really being in touch with customers. And when I was running companies, that was how I would start to answer that question. And sometimes for people, that seems like how can you possibly do that? And the answer is just to call them. Because if they really want what you're going to sell, they want to take that phone call and they want to discuss with you what's coming down the line because they need that. I mentioned a company earlier in the podcast called Unison. And when I mentioned what they're doing to large corporate customers, they want to help the company because they want that product. The sooner, the better, the quicker. So I think that if you are just operating in your own vacuum, your own team, thinking that it's exciting as an entrepreneur, you really, really are running a risk. And as an investor, you need to try to sort out where is that team with their customers and in that development, even with the earliest technologies. And the earliest technologies, sometimes it's easiest to, especially if it's a really transformative piece of science, to reach out to those customers because they are looking for that. They want that. And there are a lot of large enterprises that actually have, as part of their R&D strategy, trying as hard as they can to keep their feelers out to see what's coming down the pike that's really transformative. So I think there's all the standard pieces of diligence and looking at patents and looking at teams and looking at financials, but focusing on the customer, even just from the outset of early VC diligence, is really critical with these complex technology companies.
Well, that's a good point. The customer is the acid test on anything in the startup world. Somebody will buy it, you have something. If they won't buy it, you don't have anything. So it's a good point to bring up, even with the hardcore sciences that are still coming out of the development stage. But so how best for listeners to get back in touch with you?
I think it's easy to find me on my LinkedIn profile, Amy Salzhauer. Feel free to take a look at our website, and we have forms there for how to get in touch with us as well.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you so much, Hall. Take care.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.